Hi, everyone. This is Jack Allwell with another money episode. Today, we have very special guest Han from Byte Sized Investments. You can see him at Byte Sized Invest on X. Han, welcome to the show.
Hello, everybody. Hi, Jack. Nice to be on your show.
It's great to have you on. And before we get into some of your rental properties and how you're managing them all the way from Singapore, which will be an interesting story, I do like to start off every episode by asking, what was your relationship with money like growing up?
My relationship with money was scarcity. When I grew up, we didn't have much. My family, we were from slightly below average income. My dad was like a taxi driver. My mom was like an average bookkeeper earner. So we didn't have a lot, and I had two other brothers. So, yeah, and so it was scarcity, and we really worked very hard, trying to chase after money, which may not be the best mindset of going ahead with that. So yeah, that was the relationship with money. But along the way, as I grew, I got exposed with Rich Dad Poor Dad, Cashflow, Quadrant, and stuff, and my mind started to open up, and I start to understand the relationship between money, time freedom, and stuff like that better, much better, and understand how to. In the past, it was I must work hard for money. I must trade my time for money. But as I grew, I understand how to leverage on other people's money, how to leverage on other people's time, and create a system, create a team to 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 create value for people, and in turn, then you receive money in that sense.
So, what was it really those cash flow quadrant and rich dad poor dad that got you into real estate, or was there some other trigger that made you think like, oh yeah, this is why I want to do real estate?
So, Cashflow Quadrant was the trigger for me to think about financial freedom, to think about what does it mean to have a job. Uh, it Real estate was not the the book did not immediately translate to doing real estate, because being from Singapore, which is Asia, um, real estate prices are just too expensive, too expensive. It's like um, an apartment, say 3 bedrooms, could cost above $1 million. So it was unfathomable to be thinking about buying real estate just like that. So I started off after reading the book. I understand about investing. I started to put my money and started learning on stocks and REITs, real estate
Mhm.
investment trust, and I
Yep.
started to understand better about that, about property and cash flow from there. And then slowly, as I gain experience and understanding of how business, how economy works, then uh, I have more confidence and I started looking elsewhere. Like, okay, so started to solve problem. If real estate doesn't work in my background, where does it work? So I started to explore and explore and explore. And I was fortunate to be able to travel overseas, understand the world. I got to see US, and then it starts to connect. Then I realized, okay, so Robert Kiyosaki did talk about real estate as a vehicle for financial freedom. And now I'm closer to the real estate that he's talking about, and I start to better understand what he meant. So I dive into the rabbit hole, understanding, how rental markets are in the US, and uh, the how in general the economy work in US, understanding that I has never stepped foot in the US. So all this was a rabbit hole, and then start to landlord tenant laws and all those things. Slowly, bit by bit, step by step, in bite-sized manner, I learned all this information, and then I started to realize that actually it is not that daunting once you chunk it down and solve all these little problems, like, oh, what if I can't find a tenant? Oh, what if I can't find someone to manage my rehab? What if I can't collect money? So bit by bit, I have an answer for all these things by talking to people, learning from books and X and all those places. And then yeah, and then it become something that is very, very possible. And then you start doing it.
Mhm.
Then one thing led to another. You buy one fearfully. And then because it's the first time you part with such a big sum of money, even if it is down payment. And then after that, you own one, and when you got your first rent check, you're like, oh my god, this experience is life changing. Like I did the work to buy the property and to do some rehab and stuff like that. But when in between, when you get your first paycheck, it's like oh, this is life changing. I need to get more of this. So yeah, then one thing led to another. Yeah.
So you mentioned prior, like learning about using other people's time, other people's money, and you talked about assembling your team. What people or roles were instrumental when you were setting up initially, just to get that first rental? Like, what did you need to have in place? And were you, I guess, could you walk us through, like, did you really go like sight unseen? Did you have someone walk the property for you and just send you videos? What did that look like?
So okay, great. That's a great question. So I took about 2 to 3 years to actually really understood the business before I was confident to start. So it was researching where should I invest in, where should which market, which housing market should I invest in, um, that suits my strategy or my investment goals. Am I pursuing appreciation? Am I pursuing cash flow? Right. So then after going through crunching all the data qualitatively and quantitatively, then I zoom in. Once I zoom into the housing market that I'm comfortable with, that is aligned with my investment objective, I start to talk to many, many people there. I started to understand, bear in mind, I'm not local, so I don't even understand the purchasing process. So I had to study the process. I talked to realtors, I talked to landlords, I talked to property managers to understand the process. So yes, these are the people that are instrumental in 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 me understanding the business. So I worked with a couple of realtors. I worked with a couple of property managers at the start. Uh, then along the way, as I acquired a couple more rentals, I started to, and at first I bought them all full cash because I was not familiar with lending, and it's impossible to know everything before you start. So, uh, so I bought them um, full cash, and I started to then slowly understand how the lending market is. And I guess you guys are very, very blessed. I don't see anywhere in the world where people have 30-year fixed rate mortgages.
Yeah.
It's an amazing, powerful weapon in your arsenal. Like over in Singapore is 3 years floating rates. Like after
Mhm.
you have 2 to 3 years that your rates are fixed, after that it floats. And when it floats, your interest jumps significantly. Basically, you're having every single time you refinance. And you have to refinance. So this is one thing that's amazing. So yeah, so slowly the lender came in, and I understood the process of lending. So these people were instrumental in me uh, being able to be familiar with the process as to how I uh, walking through the process of buying the first property remotely. Um, I did one site, like I did flew into the housing market I was in Ohio, and toured and see everything that I wanted to. But that was not when I bought the property. So it because the opportunity just didn't present itself at the point of time. So but I continue to keep in contact with my realtors and the property managers, and finally one deal came, and yeah, we did a live video tour, like a virtual tour. So the realtor took the photo video and walked me through. So I was like, okay, look at this corner, look at that corner. What do you think of this? What do you think of that? And after looking through the video, I was a little bit more confident in what I'm doing, although there was still quite a lot of things that the house was a little bit distressed. So
Mhm.
then I reached out to my property manager and I asked him, can he do something like this? He was like saying, "God, he's so rough." But he said, yeah, he quoted me something and I worked my numbers around that and it makes sense. So I just did a leap of faith after that.
A couple things crept into my mind that I probably should have asked as you're going through. So when you said you paid for cash, what were you doing for work prior to getting into real estate?
I I worked for I was like I worked in the military for the Singapore Army.
Oh, okay.
Yeah. So
Okay.
and I actually worked for a couple of years already. I worked
Hmm.
at least uh a good 14, 15 years before that. So
Okay.
I actually saved up quite, and I'm pretty frugal actually.
Hmm.
So I saved quite a bit of money.
Yeah.
I have been investing in the stock market for a couple of years already, both Singapore and the US stock market. So I did considerably well. I mean, who don't during those period of time. I started investing uh right before the subprime mortgage. So and actually that was where my learning journey actually happened. Like who stole my money from the stock market. But
Hmm.
that at the same time I did have a front row seat of how the meltdown happened. And I start asking myself, like, why did the crash happen? And I really delve into the weed of, the subprime and all those things. So that was where my fear of loans came in also, because I um, felt that it was dangerous to take a loan. But that was then, and I did not fully understood all the technicalities of taking the loan, because end of the day, if you buy it cash flowing, technically speaking, the tenant is paying your mortgage and more to your pocket. And if the housing value drops, there's no margin call, which is what
Hmm.
I was very afraid of. And if you're not on arm, there's not much margin call too, right? They won't call your loan back. So then, and if you can do a 30 years fixed rate mortgage, there's no way the note is being called to you. So I'm like, what are you scared of?
Hmm.
What is the risk if you can continue to pay? If you have reserves, you have insurance, then there's really no, and it cash flows, there's really no fear of that. It took me a while to got comfortable, but yeah, it was how our loans in Singapore are structured that got me worried, and how the subprime mortgage happened that got me like a bit more, apprehensive. But end of the day, the same concept comes. Under Break down into simple steps, understand what are the risks and tackle them one by one. Once you do it, then you put them together, actually, it can be solved.
Yeah. Another thing that came to mind. So when you're talking about this decision that you're trying to make between cash flow appreciation, picking a market, how did you actually, and I'm guessing you saw through your analysis that it looked better on paper for perhaps cash flow with some appreciation over time in this Ohio market. So what like cities in Ohio, and can you kind of walk us through how you chose that market?
Um, okay, so how I chose the so basically I'm looking for rent to price. Rent to price, it has to, at least the median rent to price, it has to make sense, right? If you're picking a market that has very low rent to price ratio, like for example New York City, any of the West Coast, then basically you may still be able to find cash flow in properties in this area, but it's just that your probability is lower, since on average the median or average price and rent are that level. So when you run your numbers, it's harder for it to pan out, for it to cash flow, because there are some stuff that you can't run away from unless you pay full cash, obviously. But if you take a loan, then it's harder, because if your purchase price is so high, definitely your mortgage will be high. Is the mortgage able to cover for your rent? So these are the questions that one has to ask before that. So I run the numbers. I ask myself, where are all the cash flowing, markets are. So yeah, and I went to places like Bigger Pocket, Zillows, and all those places, and I try to figure out where are and I run my numbers. So it came down to a few places, and mostly they are in the Midwest. Obviously, there are also other places, but I mean, in aggregate, the Midwest has a lot more cash flowing cities or markets or metros. So then I also consider, places like, your natural disasters. You don't want places with earthquake, forest fires, sinkholes, all those storms, because either they will get you when they go through your house, or they get you at the insurance portion. So these are the things that I consider. So then there were quite a few places. That still was able to meet these few criterias. So yeah, then basically I did some qualitative, those are quantitative. So I did some qualitative analysis, and I look at economic growth, population growth, and going down to the economic development to find out, um, you know, what are some of the under the radar but still significant business news, economic news that is happening in that area. So it, I list them down, and then I just have to see and I rank them accordingly. I see which one is more exciting to me.
Mhm.
And at that point of time, obviously, tech jobs usually pay more than manufacturing jobs per capital. So yeah, and these are the people that really help to uh, improve the how do I say it? Because they have a higher income, they have higher disposable income, they can spend more. There's trickle down effects where these incomes do benefit the economy, like they spend more at Walmart, at Starbucks, so they tip. There might be more tips given or stuff like that. So then the economy does better when you have more income paying jobs, and because they have high income, they can pay more for their mortgages, so they can home values will also go up in that sense. So these kind of things, when I observe, I see that it does help drive the market. So that helps me to then further narrow down to a few more places, because Midwest doesn't have a lot of tech jobs that's happening everywhere. There's only in those few areas. And then after that, at that point of time, with whatever that's remaining, I just have to see which one I can is more affordable to me.
Mhm.
So there was uh Dallas. Dallas was pretty, it checks a lot on all those marks, on all those points. Well, it's not as affordable as like Ohio. So that's why I narrowed down to these places. So yeah, that's how I, get to where I am.
Cool. So what does your current portfolio like? Like what cities are they in and how many units?
Yeah, so I'm spread across Columbus,
Okay.
Cincinnati. We have 18 units in total,
Awesome.
18 doors. Yeah. Um, Comprising of mostly single families, a small handful of duplexes. I am considering looking at fourplexes, but I think still looking. It's not easy because the market is pretty hot. Uh,
Hmm.
Starting to look like it's getting harder to cash flow.
Yeah.
So just have to, work harder, hunt harder. I mean, everywhere in the US is getting harder and harder uh to find cash flowing properties. So it's really building your relationship with wholesalers, building a relationship with contractors, property managers, so that you can control your costs, so that you so that it can still be cash flowing.
Hmm. I mean, now that you say that, I mean, a lot of people are seeing exactly what you're seeing. The rent ratios aren't as attractive. And the fact that you looked outside at your country of origin to begin with, are there any other countries that you're even considering? Like, look, now, are you analyzing any other countries for
No,
rentals?
I'm
No.
I'm still looking at I'm still looking in the US in specifically in around the area where we are operating in, but notwithstanding um further out, like we are looking we are rerunning our numbers again, because
Hmm.
market change, the numbers changes, so it's always good to review every 2 to 3 years. Yeah, so it's harder, but it's not impossible. We just closed on our 18 rental property uh 2 months ago. 2 months
Hmm.
ago. Uh it's in a B plus neighborhood. But because of relationships that we have, we are able to get it from a wholesaler, and and then um after the rehab cost, it still meets the 1% rule.
Hmm.
So we are still
Okay.
good on that. Yeah. And because the market has a, in a way, because the although it meets the 1% rule, that's the exciting part about why I'm still looking at the US, because it's the only place you can do the BRRRR. So although we buy it at 1% rule, meaning the rent still meet the price that we pay, the value is much higher than what we paid for. So there's opportunity for forced appreciation,
Mhm.
which means in half a year to a year's time, we are able to then take this unit, go to the lender, and ask for cash out refinance. Effectively, because we forced our appreciation up, when we do a loan on that, we we are able to then monetize the appreciation that we created. Otherwise, we
Mhm.
can't, right? Because money equity stuck in your house is dead equity. They are not productive. You still get the same amount of rent, no matter you pay all cash or you take it as 100% loan.
Mhm.
So having equity stuck in it doesn't make sense. What you need to do is to make it work hard for you. Take it out, strip it out, monetize it, spend it if you want to. But if you're hardworking, you're younger, then redeploy them, make them work hard in the next asset.
Mhm.
So that's why I'm all in and continuously looking to explore opportunities in the US. It's really a wonderful place to do business, and at the
Mhm.
same time, um, I also think that there are a lot of opportunities for us to make, if like how do I say it, make good effects in a sense, because we do our best to be great landlords. We fix up the property into whatever best rent ready conditions, and we try to push hard to work with Section 8s. A lot of landlords that I talk to
Ah.
don't deal with Section 8s. Even some property managers, they don't like to deal with Section 8, and they do we do see more roadblocks and challenges when we are trying to house Section 8s, when we're trying to work with some of the property managers that we
Mhm.
have, like more more higher prices that we have to pay and stuff like that. So it is a bit
Mhm.
more challenging, but I think there's something that more should talk about, that more the community should talk about more, and
Mhm.
try to see how we can help those people that needs help.
It's interesting you bring that up. I've interviewed Dustin Frank a couple of times, who specializes in Section 8.
Wow.
So I'll have links to those too for but a couple questions off of what you said about, so forced appreciation are, when you're doing a rehab, are you kind of leaning heavily on the property manager to coordinate the rehab, or is that something you're kind of taking charge of and coordinating yourself? And
So
another question is, do you have like one property manager for all the units in Columbus and then one for all the units in Cincinnati, or how are they split up?
so we um we do we have a hybrid system. So when it comes to the rehab, we have property managers that help us with everything,
Mhm.
which is a good thing. But at
Yeah.
the same time, I guess there's that entrepreneurial spirit in me that I want to, explore how we can self-manage. So we do have a handful of properties that we work with realtors and contractors. Some are GCs, some are subcontractors. That means they are directly the painter, the handymans and stuff like that. And we yeah, so it's a hybrid. Some we let the property managers manage it, because end of the day, to be honest, what you want is time freedom. You
Yeah.
want someone to do everything for you. But again, like I mentioned, I do want to learn. It's part of the process of growth. I think we can't escape the responsibility to learn and to be able to know what the property manager does, so that we can empathize with them, because sometimes like this is so expensive. But when you start to realize the material cost, the labor cost,
Yeah.
and all those things adds up, the coordination cost, then you realize that, okay, property manager, I know why you charge me this way, stuff
Yeah.
like that. So these are some of the things that that if you don't do it, you'll be like complaining, hey, the cost is like that. I go to Home Depot, this is the cost. Why you upcharge me so much? You know what I'm saying?
Uh-huh.
So you don't understand until you do it yourself. And then you
Yeah.
deal with the subs, then you start to understand, okay. But at the same time, it also means that then you know the pricing. So then the property manager, then you can tell the property manager, nope, nope, don't try to pull a fast one. I know what it is. If you don't take this, if you don't give me another quote, I can do it myself. So you have
Mm-hmm.
some leverage in that way.
Mm-hmm.
So then they know
Awesome.
that they can't mess with you. Then that's ideal, because end of the day, you don't want to be doing the job. You want them to do the job. But then you can't, if without that knowledge, there's no leverage at all. So
Mm-hmm.
you can't.
Yeah.
Yeah. So that's yeah, that's how we are managing our rentals.
Gotcha. Another note I made while you were talking is you said you kind of, discovered the lending component of America when you so, and you mentioned 30-year fixed. Are you going to like DSCR loan originators? Is that what you're kind of describing there?
Yeah. I
Okay.
have to say, yeah, I have to say that you and your audience, you guys are so blessed that you guys can have access to FHA loans. Like,
Yeah.
so there is no way I can have that, and so therefore there's no way I can compete squarely and fairly with you guys. I'm operating on DSCR, um, and it does put us into some disadvantage, but it's
Hmm.
okay. I think it's fair that you guys have FHA. Underwriting is stricter, tougher, but I mean, hey man, that's your birthright.
Hmm.
So we have to underwrite more stringently, and we have to I have to underwrite and be more cognizant about, and be, how do I say it? I have to be more conservative with my numbers in order to be able to to um to make my numbers pan out. And at the same time, it just means that I have to be a better operator, be more, I have to network better, so that I can have the relationship to allow me to have access to the better deals, and to have relationships so that contractors can work with me, property managers can work with me at good operating cost.
Hmm. Okay. Um, so as we're winding down, I guess one other question I had that you are the first like international person I've interviewed that does real estate from a different country. Um, so I think I would be scrutinized if I didn't at least bring this up, but like there is like a foreign exchange risk component. So when you're doing business, are you ever converting back and sending to Singapore, or is it something like you kind of just keep the money in an American bank account and you kind of just keep it there for reserves and that type of stuff, and you're not really touching it much for like your own life in Singapore?
So I I just spent about um after achieving financial freedom, I spent about 6 months in the States actually. So
Hmm.
from January to June, I actually spent my time in the States. And I for the first 2 months, so I actually bought a van with my partner, and we sent the van for conversion, to van life conversion, so that we can travel the whole of US, and visit all the beautiful places in the van. And so the first few months was while we waiting for the van to convert by the van builder, we were doing a lot of networking, and building relationships. So that's where the that I was able to utilize the USD,
Mhm.
whatever rental income that I was doing. And when I was doing the travel, I was able to then be able to live off the rental income that are US denominated. So when I am I worried for the exchange risk? Uh, I mean, there is risk, but if because I have already sort of I have a mindset that I will spend some time in the US to travel, to network, and to just grow grow my grow my circle of friends. So then therefore to me that is mitigated because there's no I need to spend the USD, right?
Mhm.
At the same
Okay.
time, I run a financial consulting business in Singapore, where teach people, I teach foreign non-US citizens how to buy how to buy real estate, how to buy cash flowing rental properties in the US. So that helps me with my with if I need that helps me with my uh expenses in Singapore. Yeah.
Gotcha. Okay. That explains it then. Okay. Cool. Well, Han, as we're winding down, I do like to ask everyone, what is the best and worst personal finance advice you've either heard or received?
Best and uh wow, there's a lot, man. Okay. It's hard to make one decision. Okay, best finance. Let's talk about the worst one. Money is the root of all evil, I guess. Because anyway,
Okay.
money is just a tool. Money is never the root of it. The user is the one that determines whether is it evil or is it good. And I think a lot of people innocently believe that and they shun it. They shun money. Because they shun money, they missed out on a lot of opportunities to improve their quality of life. And I feel that money is just a vehicle. I feel that with money, you have time. And when you have time, you're able to pursue the dreams and the causes that you believe in. So this is key because end of the day, what do you live for? What is the purpose of your life for? What like what is your goal in life? And you able to pursue and materialize and realize these dreams and goals? And then if you are able to, then you have lived your life meaningfully in the standards that you want. So that's what I feel. That so money at this moment, yeah, money is the root of all evil. Is probably the worst advice that I've heard of. Best advice, I guess, is about I guess is yeah um it's about the definition of assets, I guess. The rich dad poor dad's
Mhm.
definition of assets. A lot of people mix up liability. Like house that you live in is your asset, which is what a lot of the people in Asia, they when they own their house, they think that it's an asset. But when you comes to the real term, the cash flow, if it doesn't generate assets, if it doesn't generate cash flow, then it is not an asset. So I guess that helps me to then start to think about what how should I deploy my capital.
Awesome.
Yeah, I
Well,
guess
Han,
that's
that's,
yeah.
I think those are great. Those are great best and worst personal finance tidbits. It's been great talking to you. Why don't you tell the listeners where they can go reach out to you or get in touch with you if they want to learn more?
Okay, yeah. Thanks for asking, Jack. So yeah, you can find me at Byte Sized Invest, BYTESIZED Byte Sized Invest. That's my X handle. You can find me on Twitter. You can find me on Instagram, Facebook, TikTok, at Byte Sized Investment. That's the full one because there's limit for the X. So again, it's Byte Sized Investments. And I have a YouTube channel too. So it's called at Byte Sized Investments too. So yeah, you can find me there. I'll be happy to, when you're there, drop me a comment, drop me a text, let me know who you are, let me know where you're from, talk to me, and I will happily share whatever I have. Yep.
Awesome. Thanks so much, Han. We'll have
Thanks,
links to
Jack.
all of those.
Thanks, everyone. Take care.
Take care.